Ayo, what's up, guys? It's Money Online, and it's yet another day. We continue with our beginners series, Forex Trading for Beginners, and today we are looking at lots. What is a lot in Forex trading? So, the basic definition is a lot is a standardized unit size used to measure the volume or size of a trade. So let me try to simplify it in a layman way. Okay, for example, let's use an analogy of boxes of chocolates. Let's say that a company sells boxes of chocolates in two sizes. We have the one of a box which has 12 chocolates in, and another one which has 24 chocolates. So those sizes are the lots if we are talking forex wise. So these are the standard sizes and are the ones that consumers have come to expect. Like they will not be expecting to just buy one chocolate. They expect to buy a bunch of chocolates, and those chocolates are like in one box. So the box is like the lot. Let's look at another example. Let's common example, buying meat. You buy meat. We have a quarter, we have half kilo, we have a kilogram. So those are the standard units that somebody expects to buy or is expected to buy. You cannot buy something less than a quarter. So the same thing applies to forex. There are those standard units that somebody has to follow. So when it comes to forex, it's the same thing. You cannot just buy one unit of currency. Instead, you buy a lot, because lots and in forex also the lots have their standard sizes, which we are going to look at. Because so if you had to say you just buy one unit, when they say unit of a currency, they mean pips. We already looked at pips in our previous videos. Check the link in the description below to the whole series and a beginner's guide to forex trading. So that means and we say a pip is this fourth, it's the fourth value here, the fourth decimal place here. That means 1.0992 here. That will be, so you cannot just be buying like to trade to get just 0.0002. It's too small. So for you to trade on a bigger chunk, like bigger chunk units, you need to buy in lots. You buy them in lots, or if you have to sell, you sell in lots, so that the trading makes sense. So why lots are important in forex? As I've said, the change in value of one currency compared to another is measured in pips. So the pips is too small, like it moves one. I'm recording this video on a weekend, and on weekends they don't trade. That's why you are seeing they are not moving here. But at least when I explain, you're going to get they move here. So let's say from 1.09922, if it's going up, it's going to go to 1.09923. It will be moving up. So those are the units they're talking about. So when it comes to forex, just like when you're buying meat, you buy in kilograms, half a kilogram, quarter kilogram, 2 kilograms. In forex, it is we have standard lot. Standard lot, this one means 100,000 of the units of the base currency. So let's say if you are trading Euro USD, a standard lot, that means if you are buying Euro USD, you'll be buying 100,000 euros. That's the standard lot. It's here, it's the standard lot. And then when we have the min lot, the standard lot is the min lot. The min lot, let's say if it's you're trading Euro USD, you're buying or selling, min lot will be one lot of that currency. It will be 10,000 units of of that currency. Let's say it's a euro or USD. That means you'll be buying 10,000 of euros, 10,000 euros, and it's normally indicated 0.1. Standard is 1, and then a min lot is 0.1. Instead of writing 10,000, it's the short form is 0.1, and this is what you'll be trading when, like, you'll be putting when you're trading on your trading platform, as we shall see. Then below the min lot, we have the micro lot. The micro lot is 1,000 units of the currency. So if you are buying one micro lot of Euro USD, it means you are buying 1,000 euros, or if you're selling 1,000 euros. This nano lot, it's, in fact, they rarely use it. So we normally have these three. We have the standard lot, min lot, micro lot, which is the micro lot is 0.01, min lot is 0.1, standard is 1. Those are the three. We shall not go into nano because it's rarely people don't use it. So that's it, as you can see there. But now the big question, I know some of you might be asking yourselves that I don't have money to buy 100,000 euros, or to buy 10,000 euros, or to buy 1,000 euros, and you find people are saying they are trading with a capital of 100 euros or $100. How do they do it? That one is made possible with the use of leverage. In our next video, we are going to look at leverage. So we hit the subscribe button, because the next video after this one, we are going to look at leverage. So leverage makes it possible for you to trade 1,000. Let's say you trade $1,000, to trade with $1,000, but you have a deposit of $100, but you are able to trade a micro lot and even more lots. You find somebody with just 100,000 in his account is trading one lot. How is it possible? And here they're saying one lot or standard lot is equal to 100,000 units of that currency, or can be euros or USD. So that one is made possible with the use of leverage. And as I've said, the next video we are going to talk about leverage. So just hit the subscribe button down, and then when I release that video next, you don't miss, you'll be alerted. Yeah, so do the needful, guys, and then it motivates me also to put out more videos. So the lot size determines the value of the pip. So why should somebody decide to go for for standard lot, mini lot, micro lot? So it's the lot size determines the value of the pip. We talked about the pip in our previous videos. So we are saying here the pip moves here. So if you are trading a standard lot or micro lot, each time a pip moves here, the value is determined. Because if, let's say, if one pip moves, how much am I getting? What profit am I getting, or what loss am I getting, is determined by the value of the lot you are trading. So let's see, the larger the lot size, the greater the value of each pip movement. For example, if a trader buys one standard lot of let's say Euro USD, and the price moves by 1 pip, like it moves here from 9922 to 9923, the trader will gain or lose $10 here. So if it moves 1 and you're trading a standard lot, each 1 pip movement means $10. So if it's a profit, it's moving in your direction, that will be a profit of $10. If it moves against you, you'll be making a loss of $10. If it moves 2 pips, you'll be making $20. 3 pips, $30. That is if you're trading a standard lot. If you are trading a mini lot, each pip movement, one pip movement will mean $1. For the standard, one pip movement means 10. For the mini lot, one pip movement means $1. And if you are trading a micro lot, one pip movement means 0.1 dollars, or the value or whatever currency you're trading, but let's move with dollars. So if it moves 1 pip and you're trading a micro lot, that means it will be 0.1 dollars. You get it, guys? So that's how the lot size determines the value of your pip. So when you're trading, how do you put the lot? As you can see, this one, when you come up here, this is where we determined our pip, our lot size rather. So as you can see here, this is 0.01. We said as we said previously, 0.01, this is a micro lot, and this is the smallest unit you can trade, a micro lot. That's why I said we don't have to look at nano lot. We start from micro lot. I've never seen a broker who is allowing nano lots. Almost all brokers, they start from micro lot. So here it's 0.01, that's a micro lot. I can add, increase, that's, so here you increase. So all these those are 6 micro lots, 7 micro lots, 8 micro lots, like that. So when here, so 0.09, this is, we are still in micro lot. When I increase here, we have already gone into min lot. Now, because we said min lot is represented by 0.1. So here we are already in min lot. If I increase, I'm still in min lot. Because you increase here and then you press. I cannot press because I have said, as I've said, we are in a weekend, I cannot trade. So I can either buy or sell. So you increase, you can increase, or you can even type in the value you want. And then let's say when I type in 1, let's say I type in 1, so if I put in here, I'm already trading a standard lot. So if I press here buy or sell, I'll be moving, I'll be buying a standard lot. So as we have said, the standard lot, the lot size determines the value of your pip. So you have to trade carefully. That's why you need to take this topic as important, because it determines how we are going to make money. So you have to take into consideration the amount you have. The amount you have, because if you put a standard lot and you have a little amount in your account, it may just move one pip here, it clears your account, or it moves 10 pips, it clears your account. So you have to first put the lot size before you trade, and you put the lot size according to the amount you have. You see, like if see the stop loss, where you want to put the stop loss, see how many pips you're going to lose, and see the lot size. You already know that if I'm trading one lot, 1 pip I'll be losing or gaining $10. If I'm trading a mini lot, 1 pip movement, it will be $1. If I'm trading micro lot, 1 pip will be 0.01. So that's it, guys. That's where this is where you place your trades from. Okay, that's it, guys. As I've told you, subscribe. Next we are looking at leverage. So we want to know, because they're telling us 1 micro lot is equal to $1,000. So how is it possible? It's possible with the use of leverage. So I'll be explaining what is leverage in our next video. Remember to subscribe. It's Money Online. See you in the next video, guys. Bye bye.